Hey everybody, Boris Schlossberg from BKTraderFx. Time for our weekly session. And this week, let's discuss the idea of being able to gamble properly. And what I mean by that is that whenever we take a trade, we're obviously always gambling. We're dealing with the idea of unpredictability. We must assume risk in order to achieve any kind of reward. But there's two ways of assuming risk. The dumb way and hopefully the smart way. And today I want to show you what I think is going to be the more intelligent way of assuming risk in the FX market, and one, by the way, that almost every one of the traders in our Millionaire Traders book uses. Since the beginning of the year, this year, we changed a little bit of our methodology by going into a 1-2 method. What I mean by that is that we started to scale out of positions, putting half out at a short target and then trying to get the rest of the position on a long target. And I think it's done much better because we've been able to bank consistent profits throughout. But here's the reason why this approach I think works so much better. Taking a look at the euro-dollar trade that we started at the beginning of the week, we went long right around here at 1.7, around 46.90, I believe. It was like right around, we were right over here. This is the 7 o'clock hour. So we went long about here. I'm going to mark it up for you and just show you, went 46.90. And the assumption was that we're going to have hot retail sales in the Eurozone. We were bullish euros. The euro had sort of come into our buy zone, and we were correct. The first target was made right over here, and I went to break even right afterwards. And here's the thing that I want everybody to understand. The reason why you take money off the table at the beginning is because you want to bank some profit and just have both the psychological and the monetary goal met. Once that's done, you can then stay in the trade and hope to make real big money. Because the way the trade is supposed to work in an ideal world is you make a little bit of money by taking profit one somewhere around here, and then hopefully if things go well and the trade really verticalizes, you make all the real big money over here. Now this happens very, very rarely. Exactly, this happens basically once or twice out of 10 times. But that's exactly how things happen in life. If you think about it, 80% of your sales come from 20% of your customers, 80% of your work comes from 20% of your employees. Life is very asynchronous. It's very asymmetric. It is always a small proportion that makes the biggest amount of profit. And this kind of a trade setup is exactly what is designed to take advantage of this rule of life. Now, what happened here is basically the fundamentals on the euro trade actually did not come through. The retail sales were bad, but we did not get stopped out, and I hung in. And the reason why is because once you've already made profits on your first trade, the job on the second lot is not to just make a small amount of money, but to hang in the trade, because now you're able to hang in the trade risk-free and hope that the market eventually goes your way. In this case, it obviously did not. We got stopped out over here, and then within the next 2 days it returned, and it would have gone our way. That happens all the time. But the point being is that we were able to hang on because we had already banked profits and we were now in a risk-free position. You always want to trade from a position of strength, and this was a perfect example of how this allowed us to stay strong through all the travails and tribulations of the market. Next time, same kind of a situation. If we catch this kind of a move, we'll be making 3-4 times our risk, and that's the way you want to be doing it in the FX market. I wish you the best of luck. Next week, more trade ideas from BKT, and I hope to see